What is going on, traders? So today we're going to have NFP, all right? So it's going to impact the dollar, US indices, and also gold, all right? So this is extremely important. This is labor data. This is something that the overall markets has probably just been waiting for this whole entire week. Okay, guys? So I just want you guys to be able to take advantage of this opportunity, right? With this prep video for this print. Okay. Just because I know that sometimes, like, if you're not into fundamentals, you probably just looking at a print and not just seeing volatile moves and not understanding why. So, definitely, hopefully, this helped to give you some guidelines, because at the end of the day, this is really just guidelines, right? And just so that we can have probabilities in our favor. But I just want to say this first, in the US markets, right? Because of what's going on right now, the Federal Reserve is in a blackout period. So that means they're not speaking on anything until after the rate decision. And what we know now is that the Federal Reserve is still data dependent. And at the end of the year, markets are still pricing in about two rate cuts for the year. Okay. So the fact that the feds are still data dependent, there's a possibility for a two-way tradable opportunity, meaning if we could get stronger data, it could be a good reaction. And if we get weaker data, it could also be a good tradable reaction, right? So I just want to put that out there first. But this is not the first time that this happened because we don't have any Federal Reserve speakers for a while and the markets are still data dependent. Even if we get a hawkish reaction or a dovish reaction, there's still a possibility of pullbacks after the moves, or we probably won't see these initial reactions right away from the data. Okay. So with these two opportunities, it just give us the best, the highest probability, right? If we wait for these reactions. So we could just take the best trade possible. All right. So for an hawkish reaction, meaning if we get a hawkish reaction, that just supports the narrative for the central banks to keep rates higher than expected. So in order for that to happen, we need a strong labor market. All right. Because a strong labor market supports higher inflation. And that's not what the feds want to bring inflation down. So if we have a hawkish reaction, meaning if we get stronger labor data across the board, we're going to see dollar strength, US equity strength too, and also gold is going to, U.S. yields is going to gain strength. Dollar strength and U.S. yields will gain strength. Then U.S. equities slash indices is going to get weaker and gold will get weaker. Okay. Because if we see a hawkish reaction, dollar will get weaker because it supports higher rates, which is good for currencies. Higher rates for is bad for jobs, is bad for companies, right? Hard to take out loans. So it's going to be negative for US indices. Gold is going to get weaker because dollar will get stronger, right? So a stronger dollar will weaken gold. All right. So stronger reaction. What I want to see is the non-farm payroll print go out above a 190 or above a 225. If we get those reactions, right? If we get those reactions, that is something we want to see with non-farm payroll. But that's what people just only focus on. And I don't want you to focus just on that. We have more data than just non-farm payrolls. We also have unemployment. All right. So we want to see unemployment go below a 3.8. And the reason is because if that number drops, it shows more people are keeping their jobs. So that supports a strong labor market. All right. So in average earnings, this is inflationary earnings, right? So if your earnings is going up, that shows that people are making more money. What that does for companies, they want to increase prices, right? So if we get earnings go up, I want to see it be above a 3.9 or above a 0.3. If we see that happen, I expect to see a hawkish reaction, which would lead to dollar strength, US equities lower, and gold lower. Okay, now moving forward to a dovish reaction, we need to see a weaker labor print across the board, right? And we just want to see the opposite. I want to see non-farm payrolls go out below a 170 or a 105. Okay, so if we get that number, that will show a negative non-farm payroll print. But on top of that, I want to see the unemployment rate go above a 3.8, if we could get it close to 4% as possible, like if we get it close to 4%, I think that would definitely be the main focus of this whole day, was just labor unemployment rise to 4%, because staying at a 3.8, 3.9 is expected. It's still showing a very strong labor market in the US, no matter what they say. So we need to see if that unemployment plan could go above a 3.9, at least a 4. I think that would definitely give us a clear dovish reaction. And then on top of that, we want to see average earnings go out below a 3.7 or below a zero point 0.3. Okay. Because if we get those numbers come out below, that definitely shows that across the board, we will see that the labor markets is taking a hit, and this would support those rate cuts, the rate cuts at the end of the year. It would just make the markets anticipate it that happen sooner. Like, so if we get a hawkish reaction, it would just make the markets believe that the two rate cut scenario is fading away. If we get the dovish reaction, it would show that the two rate cut scenario is going to happen, right? It's going to increase the odds. So just to put it in those terms. But what sucks is after the data, we just don't have Fed speakers to confirm it. But we have a whole lot of their comments before, and pretty much they're still overall data dependent. They need more confidence that inflation is going to come down. But this is the labor markets, but labor markets do impact inflation as well. Just because if people are still working, people are still spending, people are still paying for higher goods, right? So if we get the opposite of that, people not making money, people is losing jobs, they're not paying for higher goods. So that's what supports the dovish scenario and the hawkish scenario. Okay, hopefully that makes sense. Definitely take screenshots, before you could trade this event. So just the way how I like to do over my live calls, right? Because we're going to be trading this live as well. Um, I like to have my charts in this layout just so that I can see the markets as a whole. This is a good tip, guys, because if you're just focusing on one individual chart, you're not going to clearly see if the markets is reacting in a hawkish scenario or in a dovish scenario. That's the reasons why I like to look at multiple charts. Also, because I have people that I trade live with that they like to focus on other pairs. They don't just like to only trade one specific pair. So this does help from a broad perspective, right? And I also like using this style because it does help me know when to get in a trade or when to get out. All right. Because if I'm looking for a hawkish scenario, right? So remember, that is dollar strength, equities weaker, gold weaker, right? So if I'm expecting a hawkish scenario, I'm going to just show this example first. This is what I want to see. I want to see dollar and yields start pushing up higher. We start seeing those bullish candles come in play for these two things. Then I want to see indices like Nas, Dow, or S&P start pushing lower, right? And then also I want to see gold start pushing lower. Once we get the print and we see those reactions, that's going to confirm a hawkish scenario, right? That's going to cause a hawkish move in the markets, because that's how we can tell when the markets as a whole start reacting in this scenario. When the data comes out, that's if we get stronger labor markets. The opposite, if we get a dovish reaction, right? I want to see dollar break below support. I want to see the yields break below support. And then I want to see gold get stronger. And then I want to see indices start breaking resistance and start pushing higher. So that's how we're going to confirm that the markets is giving us a dovish reaction. Okay. And seeing these moves happen as a whole is what helps you determine if you're in the right side of the markets or not. Because there are some times that you could get signals that the markets is not going to follow those reactions, right? Because say if we get a hawkish scenario, right? And I'm seeing dollar just a little bit gaining strength, but then I'm seeing equities gain strength at the same time. Then if I'm looking to trade, say if I'm looking to trade AUD, USD JPY to the down, trade USD JPY to the upside because we see a stronger dollar, I would probably be hesitant on taking buys as we break above resistance, right? Because the markets is supposed to follow a hawkish scenario, but I'm not seeing equities react. Maybe gold is not pushing lower and gold is still struggling to break lower and gold is consolidating. If I see the markets is not following that's what's going to make me more patient and not take these buys. Because what could happen is I could take the buys and then I'm not seeing the reactions. And what happens if dollar doesn't break this resistance and dollar just pull back? I enter the buys too early, and then I could end up in drawdown or in a loss. So that's what helps me avoid making mistakes. And, having this layout, and you could put whatever charts you want here, whatever you're comfortable with trading, right? And having this layout helps me view the markets as a whole so I could see these possible scenarios. Because if I'm just focusing on just one chart and I'm just looking at gold, I can't see the markets react as a whole. So if I see that gold is just consolidating, right, and I'm expecting, right, and I'm expecting a hawkish scenario, which is dollar strength, and I see gold pulling up, and I just take sells because I'm expecting it to drop, the market is not reacting from the scenarios I expect, and that could cause gold to continue to push up. So I need to see the markets act as a whole, and plus wait for gold to start breaking into the direction first so the markets could prove to me that it's following the fundamentals, right? And technicals is following it. And then I could take those opportunities. Okay, guys. So hopefully this was very helpful. Let me know anything else that I could do to help you guys. And if you want more videos like this to help you prep for these events and also do market updates afterwards. But yes, if you're also interested in trading this live with me, just send me a DM on Instagram and just let me know, man. Whatever I could do to help you guys, help out this trading community, I'm here for you.